sounding board, everyone, where we bring clarity, confidence, and practical insight into the conversations that matter most to all of your factory businesses. I'm Claudia Montalbano. I am the owner of Verity Accounting, and I do consulting and general accounting for manufacturing companies in this space.
I'm Becky Gibbs. I'm an audit partner at Boyum Barenscheer. We're excited to dig into today's topic and share some insights from our unique perspectives. Today's topic is going to be around KPIs. Claudia, first question for you. If a factoring company is only looking at 3 KPIs monthly, which 3 would you choose?
Well, I'm just going to choose my personal favorites that I would like to talk about today. The churn rate, I'm going to talk about gross profit, and I'm going to talk about income portfolio yield. So those are just going to be, not that they're the most important or the least important, but I just feel like they're a good starting place for a KPI.
So what is the definition of churn rate?
So in its simplest form, it's the amount of clients that you lose on a monthly basis or an annual basis. So obviously clients are what drives your business. You can't have a business, you can't make money without your clients. So it's important to know if you're losing them at a normal rate and an accelerated rate and why. Because there can be many reasons. There can be good reasons. There can be reasons that you need to investigate. So if you're tracking this, and I like to track my KPIs on a monthly basis, and if you do it from the inception of your business, you've got some historical data to go off of as well. So you can kind of see what's normal and what's not. And with KPIs, obviously, that's important to see what's going up, what's going down in comparison to how it's been or what's expected. So a client lost could mean a contract is up and the client left. It could mean maybe you have a specific account executive where their client leaving from that account executive. Maybe it's a customer service issue. Maybe it's a pricing issue. So you can just, I think it's an important thing to follow and to understand for your business.
Define churn, or do you look at it in multiple ways, like whether it's clients lost versus the lost AR versus volume?
Well, if you lose a client, you're going to lose all of the above. So you're going to lose AR unless you're putting clients on at the same rate. But yeah, I define it as clients lost. That's how I look at it.
Okay.
That's churn in a nutshell.
So Claudia, the second KPI that you talked about was gross profit. How do you define gross profit?
I define gross profit, and it's a pretty basic formula. Your revenue minus your cost of goods sold. And you can also put this into a percentage that might be a little bit easier to view over if you're looking at multiple periods. It's easier to see and to kind of gauge an increase or decrease, I feel like, if you've got it in a percentage value versus just a dollar value. But it's important because you need to be yielding a certain amount of gross profit in order to keep a healthy bottom line, like net profit bottom line. It can tell you if you priced your deals right, if you need to maybe take a look at your cost of capital a little bit more in depth. So it's a really nice indicator, I think, just to include in your KPI every month.
What are typically the expenses you include in cost of goods sold?
Obviously, we just talked about interest. I also like to include commissions that you're paying out and your lockbox expenses. I kind of keep it simple with those 3. A lot of people, I think, will also include due diligence, which I don't. But those are the 3 top ones that I like to have in my direct costs.
Yeah. And do you not consider due diligence one just because you do that no matter what, and you might not gain them as a client?
I do, and usually it's a subscription. Like it's usually a flat cost, so it's not something that's going to be going up and down with volume. So I like to keep that just in the overhead section.
And for gross profit, I know as an auditor, what we typically look for is that percentage can stays pretty similar from year to year.
Yeah.
A 1 to 2% variance is understandable. You might have interest rate creeps, things that
Hmm.
drop, things like that. But when it starts going north of that 3, 4, 5%, I think that's like you had mentioned, you want to start looking at your pricing. Or is there some other way you have to look at how you're getting your cost of capital because your rates aren't covering your spread?
Yeah. I mean, sometimes you just have to deal with what you've got, if you're not in a position to negotiate. But you've got to figure it out because you can't have your gross profit taking up all of your revenues. Like that's going to be an issue.
Yep, exactly. Then the third KPI you had mentioned was portfolio yield. And what, in layman's terms, does portfolio yield mean?
Yeah. So portfolio yield is going to be your revenue divided by your net funds employed. So this is going to tell you the return your business is generating on the money you've got out the door. So for every dollar tied up in client advances, how much return am I producing? You've got $3 million in revenue. You've got $20 million in net funds employed. 3 million divided by 20 million is 15%. So you're generating a 15% revenue yield on the money you've got out the door. This is also a really important metric in my opinion. And it can vary based on your holdback. So if you've got a higher reserve holdback, um, you know, that you're going to generate a higher yield because you've got less money out the door. But yeah, so that's another one I like to track pretty closely and keep my eye on.
Do you track it based on industry or just total portfolio?
Well, that's a good point because some industries are going to yield a higher rate than others. They're going to maybe be a little more risky or, in trucking, that advance rate is so high. A trucking client that's priced at 3% for 30 versus a client that's um, got maybe a 20% holdback is going to be a very big different uh, yield. So depends. Yeah.
Yeah, that's definitely something we as auditors look at too, is does your yield maintain or is it varying in fluctuation? What are some indicators that if it's varying, what could be happening?
Yeah, and I think that's the fun part of KPIs is it just helps you to hone in on where to start digging in, maybe asking some questions why things are happening this way. Where if you're just looking at a balance sheet or a profit and loss statement, without actually calculating out some of these formulas, you might miss something. And I think that's the importance of a KPI is it really just keeps everything in a nice, you can see trends. And that's so important, in decision making.
Yeah, trends is definitely a key point I like with the KPIs because when you're just looking at 1 month, it doesn't give you a full picture of how your business is doing. Even just
Right.
month over month or year over year, I like to look at it at a couple of years
Yeah.
or look at it for the whole year by month to see how things are
Yeah.
trending for you. And it helps you then to be able to make changes quicker versus at the end of the year and you're like, oh no, our yield was decreasing throughout the year and we didn't make any changes.
And it might be very explainable and expected, but you're on top of it and you know why things are happening. So then we can answer questions that you have.
We have, or your bank may have, or yeah.
Right.
Yep.
Also compare it to there are some publicly traded factoring companies where you can, if you're a newer company, you don't have that history there to compare to. You can kind of gauge it off of some of the data that's available to you online. Or, if you start attending the factoring conferences and you start talking to people and you get an idea of if they want to share information, you can share information. That's what I like about the factoring conferences. There's a lot of information sharing. So.
No, exactly. I don't know. Does the IFA put out anything for those kind of metrics or do studies on that you can see? I don't know of
see a whole
anything.
lot that the IFA does with that. Becky, maybe we should come up with some information for the IFA on it.
Yeah, there you go.
So yeah, I think that's a wrap on our discussion here. And
Yeah, that was a good discussion on the KPIs, Claudia. Thank you for your insight on that. We hope everyone found our insights helpful, and if it sparked any questions about how today's topic applies to your company, we are here as a resource, so feel free to reach out to either of us, and thanks for spending your time with us.